This is Eric Mwatha with Mwatha.com. For the week of April the 9th, 2012, let's take a look at what the market did here for the first week of April. And we see that we had a slight pullback from the highs, but not really. We can't say that the market is really in trouble because for beginners, we're trading above the 50-day moving average. And really, even though we seem to be breaking this uh, tr trend line, which was connecting the lows of October, lows of November, and lows of March. This line here seems to have been breached over here, but really not a tremendous pullback. Just given the fact that the market is still in an uptrend, slightly off its highs, but it's a constructive pullback as of now. If the market continues breaking down and we see prices moving below the 50-day moving average and closing below there for duration, then maybe we can start looking at this as some significant highs. Right now, the market, I would say, is in a constructive pullback mode, and that's what it seems like. Even though some signs of if it continues, then the market might be we might have seen the highs for the year, or at least for the first half of 2012. If you take a look at the Dow on a monthly chart, you see that we are still above the breakout point on the monthly chart of 12,810. So we are still trading above that area, which is still the monthly breakout is still in effect. But the trouble in the market now is that the RSI is showing signs of a resistance. If you take a look at the RSI top lines, we see that we are finding resistance here, and this is an area where we found highs of 2011, and I wonder whether these are going to be highs of 2012 as we move further into the year. This could be a significant area in the market if the market stays below current highs going into the next couple of months. Again, if you take a look at the S&P 500, really you'll see that the S&P 500 is, unlike the Dow, is maintaining its trend line support even after a pullback, still trading in this nice support area. Also happens to be an area where you have a upward trending 50-day moving average. So S&P 500 still remains on a nice upward trend. We closed below 14,000. We don't know that that's significant, but we'll see in the coming weeks. Also, if you take a look at the RSI, you'll notice that we are at an area where maybe we might find support as far as the S&P 500 is concerned in the coming days. You see this line here is where the market is closing us right now. First week of April, we could see a bounce to the upside in the coming days. So S&P 500 is still holding above the 50. RSI showing, unless it breaks down, that we should be seeing a slight move day to day to the upside. Now, all this pullback in the world markets began when we saw that the markets were making new intra-month highs here, or let's say multi-month daily highs, and yet the technicals were not following through. So as we talked about that, hence the reason we see this pullback, because the technicals were not moving to new highs. You see that the Brazilian market, for example, you get a declining RSI line as the prices were making new multi-month highs, and that's the reason now we see this pullback. So also trading below the 50-day moving average. So if this continues being the case, maybe the next target is about the 200-day moving average, which might suggest more downside, at least in the world markets. They seem to have pulled back further than the US market, and also you'll notice that the RSI support was broken here in the Brazilian market, while the S&P 500, the Dow, is trying to find support. We see that this markets broke down sometime middle of March, and now the reason why we are down is just because of that negative divergence, and MACD is also pointing to continued downside pressure as far as this one is concerned. The same scenario with the French market. You see that we were making multi-month highs, daily highs, but the technical picture was not really changing much. So you see that we were stalling here, and as a result of this break here, we see that these markets are really off their recent highs and actually very close to a declining 200-day moving average. So the European markets seem to be more in trouble as compared to the US markets. Also, let's take a look at the German market here. We see again the same scenario. We got prices moving to new highs, and we talked about the fact this could be signs of a market that wants to pull back, and that's exactly what has happened. We were making new highs, but the technical picture was not improving. As you can see here, technical picture was actually pointing to a decline in strength as far as the technical RSI level is concerned, hence the pullback. So anyway, we are now trading off the highs. We'll see whether we snap back or whether we continue to move higher. The IYR also, the real estate index, just one of the sectors that was showing a same setup, moving to multi daily highs here, but the technical picture was not following through. As you can see, we had this decline here on the technical picture. So we are either gonna bounce off this support line here on the RSI right now, or maybe we break down and continue moving lower. So that's being the case, you see that the MACD is also at a point of inflection. Do we find support here, or do we break down? Should we break down, that suggests a market that is continuing to be under trouble and might be moving lower in the coming weeks and months. Again, I highlight the IYR because it's showing a lot of selling us a lot, because if you see that the market was making multi-weekly highs here, and yet as far as the weekly RSI is concerned, we find that we were struggling to hold. The RSI picture was not improving. So that being the case, that suggests to me that we're in a market environment that is more likely gonna be looking to pull back. Also, if you take a look at the IYR from a monthly chart, you see that even though prices are moving to new highs on the monthly level here, new highs there, you'll notice that the RSI picture is slightly actually giving us what seems to be a serious sell signal, because you see here we are finding it difficult to move above the RSI top lines. That being the case, that might suggest that a market that is gonna be looking to go down in the coming weeks and months. I'm gonna leave you with that. Just be cautious here. If the market stays negative on a monthly basis, that's gonna confirm that the RSI is confirming that we are gonna be seeing a market that wants to go down. Otherwise, no need to be really aggressive on the short side until we see the market move below the 50-day moving average. This is Eric Muather with Muather.com. Good luck, peace, and blessings.